Start your day with It's the Business. Here's Phil Dobbie.
Well, the newspapers this morning are largely about the mutant strains of the coronavirus. Hunt to stop South African bug is the headline in the Mirror. South African variants cases trigger sprint to curb spread in Britain is the headline in The Guardian. Race to trace mutant strain in the Daily Mail. And the Telegraph features a story about 80,000 people who've been asked to have a COVID test in areas where the South African strain is known to exist. But is it enough? We asked that question today. And after all that Redditt action last week, will the share market ever be the same again?
Although markets make mistakes and in the short term markets can get things wrong, markets get things right in the long term.
Rodney Hobson is going to be joining me later on to chew over that. And Virgin gives it another go as well. It's Tuesday, the 2nd of February 2021.
It's the business, making sense of it all with Phil Dobbie.
Yes, more on Redditt and the share market soon. The share market doing a good job of returning to normal yesterday. Well, as far as, we have normalcy these days. The Nasdaq bounced back by 2.6% yesterday, close to returning to where it was before the falls that we saw last week over all this uncertainty that's been evoked by Redditt. And here in the UK, the FTSE 100 back up after the fall last week as well. But still, of course, over the course of the last year, it's not been seeing the gains that we've been seeing in the United States. In fact, the FTSE 100 is down on a year ago, whereas the Nasdaq is up by almost 50%. So there is a question I will certainly be putting to Rodney Hobson shortly. Why this big difference? But of course, there is something else that is creating uncertainty, not just Redditt. It spreads as fast as a social media storm. It's that blasted virus, of course. And there is the question about what happens next, because governments around the world have ploughed so much money into their economies to see them through the crisis. The IMF reckons so far 143 trillion in public money has been spent, and the global public debt rose from 84% of global GDP in 2019 to 98% at the end of 2020. So Britain isn't really out of kilter with the rest of the world when it comes to government debt. In fact, the IMF forecast is that Britain's public debt will total 111% of GDP this year, compared to the global average for all advanced economies of 125%. So actually, we are less in debt than most other advanced economies. Of course, the United States is going to be 132% of their GDP. It helps when you've got the reserve currency of the world, doesn't it? The fiscal balance, how much further budgets have gone into the red last year? Well, it deepened by 11.8% globally, 13% more for the G20, 14.5% for the UK, and 17.5% for the United States. And this year, the world will go another 8.5% further into debt as a percentage of GDP this year. Of course, debt to GDP is a confusing figure at times like this, because spending obviously has gone up massively, but also GDP has gone down as well. So if GDP picks up, then that should help the ratio a little bit. But if countries are going to be quick to impose austerity-style measures too quickly, and we're already hearing that talk from politicians, then that's going to slow the recovery. I mean, look at Britain since 2008. Annual GDP, after 10 or more years of austerity, annual GDP has rarely got above 2% here. So that has to be a warning, surely. But if everyone is in debt, every country in the world, surely we reach a point where the world can say, well, collectively, let's write it off. Let's forget about it, particularly where it's only money. It's not tied to anything these days. You can do this stuff, particularly when there's another big cost to incur, which I suspect isn't written into those IMF projections, inoculating everyone on the planet, irrespective of where they live. Yes, even if they live in North Wales, we have to, or even places even more remote than that, we have to inoculate everyone. Almost 1 million vaccines were stuck in people's arms in the UK over the weekend, which is great, but this needs to happen globally. And, of course, lots of countries can't afford it. And if they go into debt themselves, government debt, it's going to hit their balance of trade so hard that their economies could collapse. But they need the vaccine. They need it for them and for us. Because, as all the newspapers are saying this morning, this is a race to vaccinate before the virus mutates any further. And clearly there are concerns about some mutations. Here's Matt Hancock on the Radio 4 Today show yesterday morning talking about the South African virus, which spreads easily, goes after a younger age profile, and is possibly more deadly. We've got to stop it.
I'm incredibly worried about the South African variant, and that's why we took the action that we did to restrict all flights from South Africa and movement from South Africa, and in fact to insist that anybody who'd been to South Africa self-isolates. This is a very, very significant problem. In fact, I spoke to my South African opposite number over Christmas, and they are, one of the reasons they know they've got a problem is because, like us, they have an excellent genomic scientific capability to be able to study the details of the virus.
Not everybody, of course, has that genomic capability. Something we wouldn't have worried about a couple of years ago, is it? But, we are now very aware of all of this sort of stuff. We're starting to build factories in the UK that can produce vaccines, something that we didn't have a couple of years ago as well. And do you know what? If you typed in spreads easily a couple of years ago into Google, they'd probably give you a link to the Lurpak website. Now it just gives you a rundown of all the variants of COVID-19. And there's a story in the Wall Street Journal today, or yesterday I should say, pointing to the P1 variant of COVID-19. Another one from the Amazon, which has already spread to 7 countries, including the United States. It's more contagious. It's better able to reinfect people. And it has a younger age profile amongst its victims as well. I hasten to add, this is from the Amazon, not from Amazon. You don't have to cancel all your deliveries. Can you imagine if we had a strain delivered by Amazon, everyone would have it in a week? Or, even worse, the next day, if you're a Prime member. The Wall Street Journal quotes infectious disease experts as saying Brazil is risking becoming a breeding ground for more potentially dangerous coronavirus mutations, which is all the more reason for the world to focus not just on our individual countries' populations, but on the global population, which is a point Matt Hancock made during his press conference yesterday, which is a little bit rich, actually, because if it comes to vaccine nationalism, Britain is probably leading the way on that. But anyway, once we've got lots left over, we'll give it to everybody else. But we need to do it simultaneously, I think. Otherwise, we'll be immunising ourselves against 1 or 2 strains. But that is going to be pointless once another mutation takes over. We will be back to square one. None of this is a particularly enthusiastic way to start the podcast today, is it? So we'll move off it. But look, whilst we have 14% of the population vaccinated in the UK, maybe we should be focusing as well on places like Brazil, where it's only 1%, or most of Africa, where they really haven't done anything at all yet, unless, of course, we're going to close our borders for years to come. And we can't do that. Imagine telling the British that they can't go and get their dose of European sunshine. I think some people are sort of slowly, begrudgingly accepting the fact that that might be the case this year, but next year and the year after. Of course, there is still one place where you can escape COVID-19.
Space, the final frontier.
Yeah. Yes, that is the only place, isn't it? Get on board that trip to Mars now, where we know it is COVID-19 free. Well, it will be, unless, of course, we put Dido Harding in charge of track and trace. But before that, February the 13th, that is when Virgin Galactic will have another attempt at getting into space after their aborted mission in December, when the onboard computer basically stopped everything in its tracks. But at least it didn't blow the thing up like happened to Elon Musk's rocket. And you know what? I'd still rather get on a Virgin Galactic flight than fly to America on a top-heavy Boeing 737 MAX, but that's just me. But the news that Richard Branson's company is having another go saw Virgin Galactic's share price go up 21.5% by the close yesterday evening. 21.5% in a day. We're getting used to these crazy percentages in the share market, aren't we? Which leads us very nicely to Rodney Hobson, because, of course, we saw the share market go crazy after the Redditt brigade made their voices heard, and they with GameStop going from $88 last Tuesday to $470 on Thursday. It's still well over $300, by the way, which is well away from where it first started. All because of a united attempt to see off short traders who'd sold GameStop more than 135% short. Wall Street Bets is the Reddit forum where all this action has emanated from, which has gone in pretty short order from 1.8 million followers to close to 5 million. Well, over the weekend and yesterday was silver that was their target. What's next? Let's talk to Rodney Hobson, author of Shares Made Simple and the Book of Scams, amongst others. In fact, he's written so many books. We could just spend hours just talking about how many books he's written. But look, Rodney, hedge funds have been losing, obviously, a lot of money through all of this. Do they deserve it? And is it going to moderate their behaviour, do you think?
I don't think it will make any great difference to them in the long run. Hedge funds, despite the concept that they always make masses of money on everything they do, hedge funds very often lose money. It's not the first time it's happened. They'll get over it and carry on. There's a couple of the hedge funds that have done very badly out of it. Citron Research and Melvin Capital. I bet most people hadn't heard of them before this. No. I certainly hadn't. They've had to borrow more money to keep going. So, yes, they've suffered very badly, but others will come forward because there's money to be made and hedge funds know how to make money. So they will come back. No investor, not even Warren Buffett, makes money all the time. We all get some things wrong. It's all part of stock market investing. The thing is to learn from the lessons of what you've just done, where you went wrong, and do it, and then go on and do better next time. Hedge funds will be back.
But 130%, doesn't that seem, it seems like rather a lot. You know, did they go too far? Are we going to find that now they're going to go, okay, we got our fingers burnt, we did go too far, we were being too greedy, let's pull back? I mean, they're still selling it short, of course, aren't they?
They're still selling short. Yes, some of them may say, well, right, we're not opening up so big positions next time, we're just being more careful. This may be the lesson that they learned, but they will certainly come back because there are always, at some stage or other, shares or other assets that are undervalued or overvalued, and you can make money on buying or selling accordingly, because you know that although markets make mistakes, and in the short term markets can get things wrong, markets get things right in the long term. And if a share is, say, grossly overvalued, then its share price will sink. And so there's always going to be somebody who looks for the opportunity and says, I'm going to sell out now and buy back later, because the opportunity is there. And in fact, in many ways, that helps small investors like me, because if you can see that hedge funds are taking an interest, you start thinking, are they right? This is the question you should ask yourself. Not, are the hedge funds nasty people who are trying to screw me out of money? The question you should say is, are the hedge funds right? If they are right, then I should be wary of these shares as well.
So do you think that attitude, though, of are they nasty people who are out to screw me out of money? Do you think that was the attitude in this Reddit forum? And is there a danger because everyone's piled onto this? So is that a good thing? Is this part of the democratization of the finance markets, in that more people now can have a go because we've got these mobile apps, they're easy to use? Or is that a danger? I mean, to me, it seems like a good thing. If everybody can trade in shares easily, then that has to be a good thing. The danger is, of course, that is there a bit of an imbalance with it? Because it's easy for you to buy shares. It's harder for a retail investor to short shares. So it's sort of like it's on one side, Wall Street can go both directions, but, those people with their mobile phones can only go up, basically.
Yes, well, the idea that anybody can now buy shares is a good one. It means that investments and the money that can be made from investments in terms of dividends received are available to everybody who's just got a few £1,000s to invest. It's much wider open now. It's not just for the really rich people. So that's a very good thing. But as with everything, there is a danger. There is a danger that people start piling into things that they don't understand. Now, for example, I won't invest in Bitcoin. People have made enormous sums of money out of Bitcoin, but I don't understand it. I don't understand it well, so I won't touch it. Now, the great danger of this, and I think what has happened here, is that a lot of people, new investors, people with not so much experience, are now seeing the chance to pile in. They see the money being made. They think, I'll get in behind it. But what is likely to happen is that those who got in first, the people who started this movement going, have made billions of dollars out of it, and somehow they're the heroes. The hedge funds who make billions of dollars out of this kind of trading apparently are villains. But the real villains to me are the people who started this sort of mass hysteria going, because they've sucked in people who've now been buying at the top, and GameStop shares for all that they raised ahead last week are now falling. They fell on Friday, they've fallen again today. They're carrying falling because they're grossly overpriced.
And of course, we have no idea what their motivation was. I mean, they could be saying, well, yep, we want to give Wall Street a lesson, but similarly, as you seem to be alluding to, they could just see this as a rich, quick scheme. If we can get a whole load of people, 5 million people behind us, they won't all buy, but it's a big market. Then they could come out of it rich. What about the regulator then? Because the response from the trading platform from Robinhood was to say, when this all went a bit crazy, okay, well, you can. What did they say? Basically, they said, well, you can't buy any more, but you can sell. So, that's taking. That is not a level playing field all of a sudden, is it? Which is why the regulator has jumped onto more the trading platform than it has looking at the hedge fund side of all of this.
Well, yes, indeed. The hedge funds haven't done anything wrong. They haven't done anything illegal. Where they've lost money, they've paid up the difference of what they've lost, so they've not done anything illegal or wrong. The trading platforms is a difficult area. I don't like the idea, if trading platforms have tried to save investors from themselves, then I don't think that's a good idea. Investors should be allowed to make their own decisions. I don't like the idea that if I lose money, somebody should bail me out or somebody should be looking after me. You should make your own decisions. So if that's the motivation of trading platforms, then I think they're wrong. But there is also the rather chaotic events. For example, a lot of people were trying to register new accounts. Well, if the trading platform simply couldn't cope with registering all the new accounts in time, they were right to concentrate on just looking after their existing investors. I don't think it's the part of trading platforms to say that you can't trade, you can't buy.
Yeah.
If you're prepared to put up the money, or if you're selling shares, you've got the shares to put up. As long as you're prepared to be solvent, it's not for the trading platform to stop it.
Yeah. So why did they had to go at silver? It's harder, isn't it, to trade in commodities than it is in shares, and I guess that's why they haven't had quite the same effect, the same meteoric rise. Is this going to go on? Are they going to? Is this a fact of life now? Are we going to have groups like this on Reddit, or anywhere where a group of people can get together and say, well, okay, let's collectively do something here? Is this and through social media? Is this something that the hedge funds and anybody else who's trading is going to have to keep an eye on? What is the chatter that's going on, in other words? Is this a new fact of life?
Well, it's a new fact of life. Social media is, and we've seen it in so many ways. Even affecting politics, it can affect investment. As long as enough people get together and start passing information round, they can act on it. And whether it's true or false, the information they're passing on, I mean, there's a lot of information going around about COVID and the vaccines. The people are saying, well, this is all wrong. But social media is here, and we are going to have to live with it, and information will be there. And I think that we will see this from time to time, that some hysteria will be whipped up. You mentioned silver. I think the interest in silver is, traditionally, silver has been about 1/60th of the price of gold. Yeah. And now at the moment, it's slightly less than that. So you could argue it's underpriced. So you could argue you should pile in and buy it. And what will happen, unfortunately, is if it starts moving, then more and more people will buy in. And at some point, the bubble will burst. And this is the great danger, that the bubble bursts, and the people who bought in at the last moment are the ones who are paying very high prices, and they're getting on the bandwagon just as the wheels start falling off. Yeah. And they're the ones who are the ordinary people who are going to stand the losses. So all investors should be careful. This is a bubble.
Well, I mean, exactly. Reddit aside, is it a bubble? Because if you look at, the NASDAQ in the United States, it seems to be more of a US phenomenon than anywhere else. Because you look at the NASDAQ, it's risen 46% in a year compared to the FTSE 100, which has actually fallen 11%. We've got a mammoth difference between the United States and the UK and Europe right now.
Yes, we have. I think there are greater hopes or beliefs that the U.S. market will recover faster. I think one of the things is that because Trump didn't go for lockdowns because he tried to make out the pandemic wasn't so serious or didn't even exist, we haven't had the lockdowns in the States. They haven't suffered quite the same economic impact that countries such as Britain and Europe have suffered. So that may be part of it. One of the other reasons, I think, is that the UK market in particular and European markets tend to rely much more on dividends. So people want a dividend. Half your gains come from dividends, half your gains over time come from share price movements. US companies are much more inclined to keep any profits they make and plow them back into the company and try to grow the company. So you are heavily reliant on share prices continuing to go up if you're going to make any money. So this business of dividends disappearing as in here hasn't been affected in the United States. But I think it is fair to argue now that perhaps it's the United States market, the New York and NASDAQ, that are now overpriced or at least fully priced, and perhaps the opportunities are elsewhere.
Yeah, if it's not at a bubble, it's at a dangerous stage, isn't it, right now? Look, we're going to find out later on today after the US markets close. We get Apple and Amazon, two big stay-at-home stocks. And that's we'll finish on this, but it does seem like it's all... I know the markets are very short-term, but it seems to be obvious short-term. Like the stocks that are to do with us staying at home right now are doing really well. And, we'd assume that this thing will be over at some point, and those shares are going to lose value. It's all very transitory, isn't it?
Well, there's always movements up and down. That's what makes the stock market so exciting. You'd always bear this in mind. If you get volatility, it creates buying and selling prices. If it was all humdrum and boring, nobody would bother investing.
We wouldn't be here, and we wouldn't be here talking about it. Absolutely, you're
That's
right.
Right. Yes, long live the scandals. It keeps us going.
All right, great to talk, Rodney. We'll get you back on again soon. Look, that's it for today, for this morning, this Tuesday morning, the 2nd of February. I'm Phil Dobbie. And look, I'd love to get your emails, phil@itsThe.business or phil@loudmouthcommunications.com. Take your pick, send me an email, and join us again tomorrow. Thanks for listening.
It's The Business with Phil Dobbie. Listen online at itsThe.business or wherever good podcasts are found.